HIM stocks looks crazy cheap, but there are two big problems nobody is talking about. Forget the semaglutide stop or apostrophe shutting down. That's old news already. We don't care. All that matters right now is one simple question. With HIMs down 50%, should we buy around 30, 35 or stay away? But if you can spare 10 minutes of your time to watch this video and understand every risk factor, stay away and don't invest at all. In this video, we will quickly find out if HIMs is a great deal or a huge trap. By the way, I'm Adri, stock valuation is my passion, and to help us achieve financial freedom, I invented a new metric, a new way to price companies, the value ratio. This stuff is all I do all day long. But let me be very clear, this method is new, is experimental, it's definitely not financial advice, it's just YouTube entertainment. Right now, HIMS trades around $33 for a 7.3 billion market cap. The company sells personalized, subscription-based telemedicine, weight loss, skincare, hair products, you name it. Their marketing is great, their business model works very well, and their website is sleek. Check the difference, this is HIMS and hers and this is Noom. You can immediately see why HIMS is gaining market shares. To value HIMS or any other company with the value ratio, we need three metrics: earnings, growth, and risk. Let's start with earnings. If we buy a company, we want to make money. So how much can we expect to gain from HIMS? Right now, the profits are almost non-existent because they are pumping everything into growth. But once HIMS shift from growth to profit, management expect strong margin around 20%. Considering their gross profit is around 80%, this looks achievable. So we will take 20% potential profit margin as our base assumption. For example, this year they expect sales of 2.4 billion, and that's around 480 million in potential owner's earnings. Next, growth. HIMS is growing crazy fast, not like Nvidia, but more than Palantir, just incredible growth. To me, it makes sense. Personalized telemedicine feels like the future. We have different weights, different bodies, different hormones, different metabolism. We are different people. We should have different dosages. The fact that HIMS is investing in new pharmacies to improve personalized production capabilities is very promising. But let's translate this cool story into a number. What's a reasonable revenue growth rate for the next 5 years? Analyst thinks it's 27% annually. That's massive, but I think it's achievable. With the value ratio, but also with the discounted free cash flow model, growth assumption heavily influence our results. If HIMS only grows at 10-15% instead of 27%, the stock will crash. That's why fast growth is exciting, but is also very dangerous. We have to be careful, especially when it comes to HIMS, because there are some big hidden problems. Let's talk about risks. There are standard risks, and then there are two extraordinary problems unique to HIMS business model. The standard problems are: 1. The margin has to jump from the current level of 4% to 20%. It's clearly riskier to invest in a company like HIMS than not into a company that have already achieved margin efficiency like Apple or Microsoft. 2. 27% compounded annual growth is very ambitious. I mean, the company could grow an incredible 20-22% and still fell short compared to our prediction. 3 is share dilution. Last year, half of the free cash flow was obtained by share-based compensation, so as we can see, share outstanding are increasing, and that's definitely a red flag. 4. It's cybersecurity. They have a lot of personal sensible data, and a hacker attack could be very bad for them. The good news? They have 300 million in cash and no debt, so bankruptcy isn't likely. But there are two problems unique to HIMS that would worry me as an investor. The first is the regulatory risk. Telehealth exploded during COVID with regulation ease, but regulations can change fast. For example, in Europe, a company like HIMSS will not be able to exist with the current rules. Are we sure that in US we will not see more limitations? Especially when there are federal and state laws in play simultaneously. I expect Walgreens or traditional healthcare to lobby hard against telehealth, so I fear any misdiagnosis or prescription scandal could mean lawsuits overnight. The second problem is that churn rate is a mystery. HIMSS decide not to disclose their churn rate, and for a subscription-based model, some churn rate is maybe the most important metric. Their customer acquisition cost is around $900, and that's huge, but they claim it's profitable within a year. But that's only sustainable if the customers stick around. In generally, high churn could mean endless spending in marketing. It's concerning because reading online reviews, the most common complaint are slow shipping and scammy cancellation practices. Basically, they're already doing everything they can and more to keep people around, and their marketing spending is crazy high, 46% of their revenue. Eventually, in some years, everybody in the US will already know about their service, and that will slow down their new customer acquisition. Given all this, my risk score for HIMSS is 57 out of 100. To conclude and recap my assumptions, we gave 20% potential profit margins, 27% growth in the next 5 years, and a 57 out of 100 risk score. The current price of $33 give me a value ratio of 16 and a fair price of $49. With all considered, HIMSS is cheap right now. I believe it's a high-risk, high-reward play. If the risks don't materialize, the stock should skyrocket, but 57 out of 100 is pretty risky. Anyway, even if it's 50% undervalued, I don't have the liquidity to invest right now, so no problem, it's easier this way. I always have doubt investing in the healthcare since I believe the system is wrong. We should pay for each day that we remain healthy, like in the ancient China, not paying when we are sick. I mean, the incentive is wrong. If they profit from our illnesses, why would they want us to be perfectly healthy, right? I mean, do you really believe they have our best interest in mind? I don't want to get political. Let me know what you think. Leave a comment. Thank you very much for watching. Next goal is 300 subscribers, so help me out. That's it for today. Peace out.